Hello and welcome to this new blog post on sustainability accounting. In this blog post, I would like to detail the budget plan and the configuration that I used in my previous blog post so that you can replicate things. But as usual, here the disclaimer. And now let us start with the details. So in the previous blog post, we had a look at different drivers such as growing or aging population, globalization, changing regulations that have an impact on our long-term strategic planning and different risks, such as climate change, higher energy costs, and so on, and what they mean for our relative importance of the costs within our corporate structure, but also over time. And what we did was something like this. So first we started off with applying ledger allocation rules to incorporate and weight different factors. So as an example, because of higher or increased damages, increased storms, increased floods, we can expect higher insurance expenses because of climate changes. And then we said, okay, based on that, we can use and apply different allocation structures that weight how much does these insurance expenses, an example, account for in relationship to our total expense. And we did something in similar way for our revenues. Just to weight the different importance and incorporate risks. And then we said, okay, we have different growth factors for sales and costs. And then we allocate these things over time based on different growth rates that can be different and fluctuate over time. So that's what we did. And then we incorporated this by applying different budget plans. And I showed you 4 different scenarios or simulations, where I played around with different budget plans for sales and costs and tweaked the factors a bit. And at the end, we got a report that shows here 2 simulations, but we continued that until they were complete. Okay, and now the question is, how did I set up these things? So let's have a look. First thing is I set up an organizational hierarchy that only contains one element, and it's the company DEMF. That's all, nothing else. Then I have a budget cycle set up that covers the years 2022 to 2026, because I said 2021 is the year where I'm having my current operational budget, and my long-term strategic planning is for the 5 years afterwards. Then I had 4 different budget models that I called simulation 1, 2, 3, and 4. And 1 budget code that I just called simulation, and that has a reference to this budget type original budget. The next thing was then, okay, I said I have different weights and different estimates. What is the importance, for example, of our insurance expense? What is the importance of our electricity expense in relationship to our total costs? And based on that, I set up different ledger allocation rules. And here's an example how they look like. So here on the left-hand side, you can see that I have 3 different ledger allocation rules for the costs. So cost structure 1, 2, and 3. And I did something else for the sales. And then the source is very easy. It's just the main account. This is a summary account, a total account in my ledger, in my chart of accounts, that is used in the budget planning when I entered. And then the destination just allocates the amounts that we record on this account based on different percentages. So it's pretty easy. Now the other thing that is a bit more complex is the allocation over the time. So the question is, how can I incorporate these cost growth rates of 6%, 1.5%, 2% over the years, so that my budget can automatically be spread out to the 5 years. And what I used here are the period allocation categories. And let's have a look at the first one. The first one makes use of these percentages And it assumes, and I put that in the name here, it assumes a growth rate or change of the cost of 6% in the first year, then 1.5%, then 2%, 1.75%, and 2.25%. And now the question is, how did I come up with these percentage values? Well, the next slide tries to explain this. So we start off here by the change rates. So I expected a change of 6% of my cost in 2022. Then I have 1.5%, 2%, 1.75%, and so on. And this is just translated into a decimal number. So the first one here, 1.06, is nothing else than 1 plus this. The next one, 1.0759, is the previous one times 1.015. So it's just here a bit rounded. And so on. Yeah. So here you can see 1.06 times this gives this number. 1.0759 times this gives this number. And so on. And the important thing is that you calculate the total here, because that will be needed later on in the next step to calculate the relative importance. So how did I come up with this 19.3%? It's simple. I take this 1.06 and divide it by this total. 19.59 is 1.0759 divided by this number, and so on. And these are the percentages that I used then in the period allocation categories. And I created just 3 of them, but you can use 10, 15, whatever you need for simulation purposes. Okay, the scenarios, I just used 2, a base and a years, and we will see this later on. And here's the key basically, because this slide shows you the different budget stages. I have 4 budget stages, an initial one, then one that allocates the costs based on the allocation rules. Then I have a stage where I distribute the amount over time, and then I have a completed stage. Yeah. And here they are listed just there. So the first one is initial, then this allocation structure, then over time, and then complete. And what I'm doing here, these are the different steps. We will see this in a second. But these different steps are linked to a workflow. And I have 2, one for sales, one for costs. And here you see the linkage of these stages to the workflow elements. So I start off with this first one where I say, okay, I have an initial check if I want, but just for demo purposes, I set that to autocomplete. You can actually say, okay, there's somebody who has to do an initial check whether the numbers are okay before we go through all the different steps. Yeah? After this initial step or check, we go to a stage transition and move from this phase to this one. Then we do our allocation over the different main accounts. Then we do another stage transition. Then we do our allocation over time, and then we are finished. That's it. So here in step 3, that's my step 3, I execute the ledger allocation rule. In step 5, I execute the distribution over time. And this is the key here. These are the budget planning allocation schedules, where I have a first one that says use the ledger allocation rule. In this example here, cost 3. And on the right hand side, you can see this is for the simulation of the costs over time, where I say allocate across periods according to this key. And here you have this multiplier. That's the number that we just calculated, and that's important. And then here we have the source scenario and the destination scenario, which is the same for this ledger allocation rule. But when I distribute it over time, I said, okay, I want to have it in this scenario called years. It's not really necessary, but I just wanted to have it this way. Okay, and this slide just summarizes these things once again. Then the next thing is the stage allocations. They basically define when these allocations, either the ledger allocation rules or the one over time, are executed. And I have here the first 2 lines, they are applied to my sales, the last 2 lines for my costs. And what you can see is once my workflow is in the allocation structure stage, then I'm executing this allocation. Once I'm in the distribute over time stage, then I execute this allocation. Then I have different columns for the years because I want to see the numbers for each year. And here the important thing is that you have a reference to year 0, year 1, year 2, and so on. And then I used here a layout where I just listed all the columns. And once you have finished this configuration, then you need a budget planning process. Actually, you need two, one for the costs, one for the sales, where you establish a linkage to the budget cycle, the ledger, and the default account structure. And here you have a linkage to the organization hierarchy that just contains one single element, the DEMF company. And here you have a linkage to the workflow. And then if you scroll further down, you will see the budget planning stage rule layout. That's just the different phases that I have. And that's the setup that we need. Okay, let us have a quick look at the setup in more detail in my system. Okay, so I'm now here again in the German DEMF demo company in the budget planning configuration form. If you do not know where to find it, it's under the setup. And then here we have budget planning configuration. And let's just go through what I showed you. Here are my scenarios, the two that I used. The other ones, they were already there, so I did not use that. Then I have here the 4 different stages that I make use of. And here are the workflow stages. I actually have 2 workflows. One workflow for the simulation of the cost, so that's the workflow ID. And there's one here for the sales. And the important thing is here that you have the right sequence here. From initial to allocation structure, distribution over time, and then to the completion one. The next thing are the allocation schedules, and there a couple of them are there. But the one I use, the simulations for the cost. So this one is for cost, and this one is for sales. And each of them contain 2 elements, one that uses the ledger allocation rules and one that uses this allocate across periods. Yeah, the ledger allocation rule just makes use of these allocation rules that we set up. So if you want to play around with different data and simulate different outcomes, you just come here and select a different rule here. So that's all what you need to do. When it comes to allocating the amount over time, you basically do the same. Yeah. So let's select this one. But then there's one important thing. You have to change this multiplier. And if you remember how we set up these allocation keys, these period keys, then I set it up in a way that I can directly identify the factor in the name. So if I say, okay, I want to simulate my sales based on this growth rate, then I have to put here 5.49, and that's why I put this here into the name. So that's the key for getting the distribution over the different periods based on these growth rates. Here we have 3% in the first year, 5% in the next year, and so on. And the idea is the following. So you, with this setup, you go create a budget plan, execute it, get a result. Then you come here again, change this key, for example, to this one. Change the multiplier to what is specified here in the name. And then you run another budget plan to get a different simulation outcome. Good, then we have the stage allocations, and the one I used are the one here at the bottom. The other ones are already there from the demo data. And they define basically what you do and when. So if we just have a look at the sales, so that's my sales workflow. And here I have this stage called allocation structure, where I say I execute this allocation rules from GL. And the distribution over time, once I reach this stage, then I'm executing this schedule here. Then I have the different columns. And here, once again, that's the important thing here, that you have a reference to the correct years. And then the layout just combines these different columns that I have. Okay, so that's what you need first. And then once you have the configuration set up, then you go in the budget planning process. And here I have two, one for the costs, one for the sales. And the thing here is it just combines basically what you have set up before. So we have here the budget cycle, here the ledger, here the default account structure, then the organization hierarchy, and here is the workflow. And if we scroll down, then we can see here the different stages and what is allowed in each stage. And then of course, the important thing is that you activate this one. And once this is done, then you can come here and say, I create a new budget plan. So let's do that once again. So you come here and say, let's do a simulation of my sales. So let's say simulation sales, English 9. Then we say created. We add our line. And here we had, I think our starting point was 1 million. Okay, and this is an amount that we basically defined. But the good news is you do not have to identify this number or come up with this estimate. What you can do is you can actually make use of these periodic functions. So you can say generate a budget plan, so this number from GL entries. So you can say, okay, based on what I have done in the last year times a factor gives me this number, gives me this one. And then you just start the workflow. So you submit it and then you say, okay, let's see what is the outcome. Or another option would be to generate this from another budget plan, just to come up with this initial base number. And of course, once this simulation is then going through, then you can come into the budget planning configuration. You can go to the allocation schedules, search for the simulation ones, and then you say, okay, now I want to see what happens if, let's say, we choose here a different structure, save it, create a new budget plan, and then see what is the outcome and compare the results. Okay, so that's it, what I want to share. I hope you got the idea how to set up this budget planning configuration and how to do the simulations. If you still have questions, just send me an email as usual. But for today, I would like to close it with this and look forward to the next webcast then.